Really genuinely quite touching for me, hearing your amazing words. You know, this mentorship started off as just a community for me and my mates, and then I thought, let's put some coursework together, and now we're here kind of a few years down the line, and it's pretty amazing hearing how these kind of findings that I've built over the years for my own personal gain, so completely selfishly, is hopefully enriching your lives as well, and it's really quite incredible. So thank you, and I really appreciate it. I'm going to keep growing, and I'm going to keep developing the strategy as much as I can. I'm going to keep implementing new things, testing out new things, even at the detriment to my own trading sometimes. I've been playing around with a few things this last week or so. Which is why sadly I haven't passed this challenge that I'm running for the course, which is very frustrating, but I feel like I've got a couple of bits cracked. And some of you joined us on the webinar the other day to talk about the daily open. I think it's a really important tweak that we can just add into our trading. I'm going to show you a few trades that I took this week basically, and how effective the daily open was as a confluence. And as always, I don't want it to become a bit of a catchphrase, but nothing that we teach, no individual aspect of the strategy is a strategy in itself. As always, everything that we discuss, every element that we add to the strategy is, it's exactly that, is an element itself. It's a confluence to add into your trading, to help you basically filter out bad positions. That's kind of the way I look at it. So let me share my screen. And just let me know you can see all this, guys. Everyone can see this?
Yeah,
cool. Right, let me just give it that horrible box that I hate. Okay, cool. So I've just got a blank, it's not a blank one, is it? So I'm just going to go kind of back in time, and let's just have a look at some candles. Let's go from here. So where are we? So 11th of March 2024 on the 5-minute time frame. So Sunday, Monday. Okay, cool. So that's worked out really nicely. So the weekly open, I kind of played around with, and it was something that I knew a lot of traders used, but I personally never found it that effective, if I'm honest. And what I typically found with the weekly open is that it's like anything. The weekly chart is, it moves so slowly. But actually, when you start paying much closer attention to the opens, and the more kind of studying I've done on them, it makes you realize how supportive they are for the marketplaces. So, I think we can all agree we've gone back in time. We've gone back to the 24th of March here. We've drawn on the weekly open from Sunday, and I think you can all pretty much agree that that's been quite a sensitive area, right? We've had, and as with anything, when you're looking at weekly areas, I think you can give it a bit of space. It's always worth giving it a bit of space to make sure that, we're not saying, well, that doesn't count here because it didn't touch it perfectly and exactly. I think that's a really important differentiation to make. With weekly whatevers, I'm always going to be looking at them as zones. Now, I may not draw this box around it to keep my charts nice and clean, but I think you can all agree how sensitive that the market has been, certainly in this week. And if we go to, say, the following week, so let's go to, so that's Monday, Sunday, okay. Let's do the same again. Okay, let's draw on our weekly open here. Okay, you can see once again, price, has had some support and resistance there. Now, the reason why I never really like trading the weekly opens is mainly because of the kind of the standard supply and demand theory. And, I'll just illustrate that for you a little bit, okay? Someone tell me when.
no,
Okay, right. So, if I take this chart down, and I just draw, where's my little lock tool? Okay, I just draw some random lines on, okay? What you'll find is, and the reason why I don't really like the weekly open, okay? What you'll find is you can then go forward in time And you will find that random lines on charts, if we get back down to them, which I don't think we will, but let's go back to this section. Random lines on charts almost seem to repel them magically. Okay, so we've got, we've got resistance here. We've got support being found here. Oh, bloody hell. That's a big one, isn't it? We've got support here. We've got support here. We've got resistance here. We've got resistance here. We've got resistance here. We've got resistance here. So I'll be honest. I know a lot of people like to look at the weekly opens, but personally, I find that the weekly opens, and I mean, look at this price action here. Okay, you can see what I'm getting at. They all look like these levels are having, a supportive or reactive effect on price, when actually we just drew these on. You watched me do it. We drew these on completely randomly. So for me, Firstly, if you've made it this far, thank you for watching. I've got a freebie for you. Go ahead and hit that like button below and comment with the word vid for an exclusive free video from the 2024 Strong Money Forex Mentorship course. Side note, if you want to know more about the Strong Money Forex Bootcamp, send me a message on Instagram. Not being a huge fan of the weekly opens, it's a difficult concept for me to really truly grasp, because I don't know whether price is truly reacting to that weekly open, okay, or whether personally it's just an area which is coincidentally being reacted to. And so it's difficult for me to base a trading strategy off the back of it. It's something that I'd always say keep an eye on and be aware of, but possibly not one to bet your account on. That's what I would say. So that's Friday, Sunday. We've got Sunday here as well. Okay, but you can see, it does have quite a good reaction on price, and this seems maybe a little bit more accurate. Monday to Tuesday will often kind of play around at the level. Again, Monday to Tuesday playing around at the level, finding support here. If we zoom in here, it is clearly reacting to those levels. So I think it's something that if you wanted to, you could include in your trading. Now, for me, it's not something that personally I feel is absolutely necessary. And actually switching over these last couple of weeks to a daily open, I found if you trade it not from a support and resistance point of view, but from an area where price is going to be attracted to, I find that it can work really, really well. And I've taken a few trades off the back of it this week that I'll show you later on today. But what I found is it's a great filter. So let's just take that off for a minute. Let's replay ourselves down to here, and let's jump up to the 15-minute time frame. Let's see what we get. Okay, so where's our first level? So that's Sunday, Monday. Okay, cool. So what we have here is we have a low. Okay, and I think lots of us have been in situations in the past where we see these levels and we see these big moves down towards them, and it can sometimes be difficult to understand where we should be going next. Now, what I quite like about the daily opens is that price is very much attracted to them. So what it's given me the ability to do this week is to add extra confluence to whether or not that is a clear break of the liquidity and therefore price is going to push down, or whether we should be seeing this as a sweep, break a structure, and then a potential buy opportunity. Okay, coming into the marketplace, take it back up. And what I found it was really, really good for is it was really, really good for picking targets. So as I was trading these last couple of weeks and I wanted extra confluences other than just liquidity areas to picking targets, I found that these daily open levels were really, really handy to get me in and out of the market ultimately. Okay, and you can see here, let's see if we get it. Okay, we've then, which do we do first? I'm not sure. You might be stopped out on that one, but look, you can see the point I'm getting at. Okay, like anything, we've got this area around it. Price is very clearly being attracted to it. Now, what's great about the daily opens is this: there is no real clear and obvious liquidity in this little range here there is no real clear and obvious liquidity in this little range here that indicates that we're going to be going bearish. I think we'd all probably agree that what we'd want to do is take out that external liquidity, which that little news event, as you can see, did. Okay, want to take out that external liquidity. But it gives me another reason to be considering taking trades out. Okay, what I can be looking at here is jumping up the time frames, seeing if we can find a range liquidity point, which I don't think we have one. We've not got one swept. So then sometimes I would look at these areas where price reversed from and be like, well, why has that happened ultimately? Why has that happened? And if we take the actual daily open, which is that low of that candle there, okay, we haven't taken out range liquidity, nor have we taken out external liquidity. However, price has rejected. And if we've been really unlucky, we might have even got a break even or a stop there. But if we'd taken liquidity out at the daily open, knowing that it's a sensitive area, and coupled with the fact that we've got an imbalance sat in here, this could be an area that we're going to reverse from. For me, I found that really, really helpful recently. And I would often be holding to these external levels and expecting price to come up and take these out before I took my profits out. But actually, what we've had here is we've just had a tag of the daily open, okay, and a rejection, which if we'd been, like I said, if we'd been unlucky, might have then got us back into a break-even trade. So it's a good area for profit taking. Like imbalances, okay, it's an area where we can be expecting price to return to. And what this does then, it gives me this level of magnetism, this additional magnetism. I've got an EPA level there. I've got an imbalance sat in here. Let's get rid of the range so it's a bit clearer. I've got imbalance sat in here, and I've got a daily open. That for me, I've got 3 reasons why price is likely to return there. Whereas looking down here, what have we got down here? Well, we've got nothing until these kind of low areas. So that's a nice counter trend trade that could have really added to your bankroll. Okay. Does anyone have any questions? Does that all make sense? Yeah. Great.
Yep.
Good. So I'm just going to go through the charts a little bit today. I just want to kind of go through and just show you how I would start looking at the marketplace and how I would start using these. So we've got our daily open, which is also a weekly open here. So, if you wanted to leave the weekly open there, again, it could be a reason why you're expecting price to return to certain areas. The way I really like to use it is I like to assume that if we are below the daily open, the assumption is that if we get a liquidity sweep, which we did, we're going to get a push into that daily open. If we're above, then the likelihood is we're going to pull back into that daily open, okay? And for me, that's been, like I said, really, really helpful. So here, for example, okay, this is a really good example. Let's get rid of that one. Let's zoom into this price action. So you're looking at this price action and you're kind of wondering where price is going to go. So, if you'd sold from here, you'd have had a good trade down to that liquidity. If you'd bought from here, you'd have had a good trade down to, there we go. So we've got that liquidity taken out there. Let's say you've been really on your toes and then you bought from here. That was a nice trade up to that liquidity level here. So, when you've got these market conditions that are kind of ranging like this and you're not sure where to go, that is a really good filter. Well, we've taken out liquidity. We're below the daily open. The likelihood is that we're going to approach back into it. Okay. And then you've got up here, we've got a clearance of liquidity out here. So that's taken out loads of liquidity. We've had a really late news event, which has pushed us up here. Okay. And then let's draw on our daily open, which would have been here. Okay. In this example, we've pushed down, we've moved away. Okay, you could have taken a buy on here. Okay, and this is why you want your other market confluences with you. You take a buy up here. You had a nice push up there, but you would have probably got either a break even or a loss on that one. Okay, so it's always worth factoring in your higher time frame market conditions, because now when you're looking at this, okay, you are above the weekly open. Does that give you a reason to assume that we're going to push bearish? Okay, does that give you a reason to assume that because we're above the weekly open, that actually we should be looking at sells from here rather than expecting buys to come here? Because we still want to include within this everything else that we've learned. So we've got our accumulation down here. We have our manipulation here very clearly. Okay, so we're now on Wednesday. We expect a reversal on Wednesday, don't we? Tuesday, Wednesday, that's when we expect our reversals. So then we've got a distribution coming all the way down here into Friday, and then we've got our classic kind of Friday reversal. So that's a pretty much picture perfect week. Those trades from above the weekly open could have given us a really nice entry. These trades from below the weekly open would have given us a really nice buy. Okay, so this is how I would suggest to start using these areas. Okay, like anything, you know, you're not going to win every single time. We would have had, you know, a win here, win there, win there. We would have lost on that one. Okay, then we come all the way down here. Probably wouldn't have taken the trade at 5 o'clock. So then we draw on our daily open for this day. Okay, you've pushed down through Asia, you start making some bullish price action, you'd have had a win there. Okay, so if you just literally traded this strategy on its own, okay, you'd have probably made yourself some, you know, pretty decent returns. This one here, you've had a push up. Let's see if we get any structure. So the difference here, so just to talk you through and give you a bit of clarity, okay. And this is something that I'm seeing you guys are missing quite a lot in your trading at the moment. It's something I wanted to kind of talk through today as well. So here we have very clear bullish structure, right? Okay, we're breaking highs, we're pushing bullish, creating bullish moves like that, okay? Now, these setups here, none of this is giving us any bearish price action. Let's see if we can get down to the 3 minute. Every weekend, I host a Sunday webinar with my mentorship students. Starting from March 2024, I'll be opening this up to my YouTube family too. Get an insight into the way that we trade, the strong money Forex strategy, and a taste of the profits. The best part is, it's completely free. All you have to do is head over to my Instagram at Strong Money Forex and send me a DM with the word webinar. I don't think we can, unfortunately. Okay, and what we're doing a lot of the time, and I'm seeing this in some of your trades at the moment, is we're not actually trading in line with market structure. We're missing out that really key basic. So what we're seeing a lot of at the moment in the group is we're getting these sells like this, where people are expecting price to move rather than reacting to price creating structure. We don't actually, on this time frame anyway, we don't, and I mean, you've got, do you know what? You might have been unlucky and you might have got that trade like that, okay? Because you've taken out liquidity to the left. You have had some structure in here. Can everyone see that, yeah? Okay, you have had some structure in here. So if you're on the 1 minute time frame, you may have got into a trade here incorrectly. Well, not incorrectly, actually. That would have been probably a valid trade on the 1 minute time frame. And look, you know, we can't ever avoid these losses. So just bear that in mind. If we jump up to the 15 minute and just have a quick look at that liquidity that we've got there. Oops, sorry guys, just moved you out of the way, 2 seconds. Yeah, we have a look at that liquidity we've got there. So we've taken out liquidity here. Mark that on. Taken out liquidity here. And then, oh, stupid fucking thing. And you don't actually technically have a break in bearish structure. So you'd have had to be really bold to get in on this move here. Where I would have probably got into is some sort of pullback like this. I quite like that as a safer trade. In fact, I think I even took that trade because that was a news event, wasn't it? 18th of March, I think I remember that one. Okay, and then holding down to like the Asia low, something like that. So at the moment, what I'm seeing quite a lot of is these kind of trades before structure has changed. Now, I don't trade market structure, as you know. It's not something that I see as the most important thing, but sometimes I think that gets confused with me not paying any attention to it at all. I always pay attention to market structure, okay? It just doesn't form the basis of my trading. Okay, what we want to be looking for is clear changes in structure, like this big move here. Okay, it's a no-brainer now that we are going to be pushing bearish. Okay, same for this one here. Nice big bearish moves like that. That is a really clear indication that we're probably going to be going bearish further. You might have been, if you were just trading the daily opens, you might have been unlucky and caught yourself into a loss here, but you could have quickly changed your bias and you could have bought down here. And then when price took out some liquidity, which I'm assuming it did from there, okay, you could have bought yourself back up and took a trade, which, as you can see, let's just get this absolutely accurate. Open was there, okay, and then here, almost to the pip, it's come back up to that daily open, reacted again the following day. So, you know, this is hopefully just another confluence you can add into your trading. As you can see there, as we've discussed these last few trades, if you just literally traded the daily opens and traded back into them, you know, you'd have probably made 50, 60, 70% of those trades back, which is fantastic. Does that all make sense? Is that something kind of helpful and useful? Do you think we can start implementing that? Yeah?
I'll have a look at it. Yeah.
I think it's something, you know, to put on your charts and just, you know, have a look at as an additional filter. You know, for me, you know, yes, that's a clear sell setup, but I've got even more reason to go bearish now. Equally, you know, looking at this, we've got this kind of hesitation in price, and then we start breaking structure coming up here. Well, maybe I can get into a trade like this now, expecting price to, you know, come back into that daily open. So it's been a really good filtering process for me to give myself a bit of direction when I'm unsure. There's lots of times where I haven't traded previously because I'm just not sure where the market is going to go, and you know, I find this is a really helpful filter to include. I'm going to go through. I've got about 10 minutes before I'm jumping onto the CTI Discord for the weekly forecast. If you want to jump on that with me, guys, you're more than welcome to. So I want to kind of go through a couple of trades from this week and just talk you through how and why I entered them. I appreciate the charts are a little bit messy at the moment, but I've got some analysis videos to record, so just bear with me. If anything doesn't make sense, let me know. So let's have a look then at, where were we? So this was Wednesday. So Wednesday we had a really lovely day, okay? I'm going to replay the tool back down to here, okay? And I'm going to mark this one on here, okay? So that's our daily open. And I'm going to drop down to, I think I'll probably get to the 3-minute time frame. Okay, so for me, I knew we were in a bullish range, okay, which is this range we've got here. We're in that nice bullish range. Asia took out liquidity, and we started breaking bearish. Now, I would have loved a cleaner sweep. I would have absolutely loved Frankfurt to be swept. That would be my perfect trade. We didn't get that. And as you can see, I took my time and I waited until we got a bearish break. Big bearish break like that, okay? Corrective pullback. I'll probably get down to the 1 minute to show you. Nice corrective pullback. That for me is my absolute gold setup. We get that liquidity sweep in here, which is in that Frankfurt hour. We then get some really clear bearish price action. This is where I'm not going to be jumping into my daily open buy. For me, I'm clear that I'm bearish. I'm using the fact that I've taken out higher time frame liquidity to tell me that we are going to be going bearish, at least in the short term. And I took a trade from here, MSU setup. So we have ISC here. And we have our MSU, which is across here. Okay, you could use any one of these highs, really, it doesn't really matter. Okay, and then I think I got in on some of this engulfing. Nice safe stop. Okay, could have gone tighter with the stop, obviously, got myself a better trade position, but I like to play it safe. So nice safe stop. Sometimes I'll tighten them and then I get stung because price comes up and does this. So a lot of the time now, I'll just make sure we do a nice wider stop, okay? Just like you guys, I like testing things out. Sometimes I'm feeling braver than other days as well. So sometimes I might do a nice tight stop, but a lot of the time when I do the safer stop, yeah, I don't make as much money, but we get more profit out of it in the long term. Here, this is where I did use that daily open. So the expectation is that we were gonna give a trap, okay? So I was looking for this complex reversal pattern. Now, the beauty of a complex reversal is that once you've got this initial breaker structure, or what we call the freight breaker structure, that low is often creates a trap. And we had the New York Open trap, which was here, that was swept. Okay, that was the New York Open trap. That was cleared out. But then I saw this big bullish push down here. which then swept and rejected. So I waited for an engulfing and I got into this. This is a high risk entry. Absolutely, admittedly, it's a high risk entry. The safer entry would have been waiting for some structure and then jumping in, which is how I kind of scaled into the position. I added a couple of extra positions in here. But I know that if we are in an area of reversal, which is where we've swept the London low, if we're in an area of reversal and I'm getting this really clean reversal setup, for me, that's an area where I can jump in quite quickly. I know that the likelihood is at a reversal area like this, we've come down, we've dropped down into these kind of more discount areas. We're still in the premium section, ultimately, of our higher time frame range, but we haven't swept out the range yet. So my expectation is that we're going to push higher ultimately and take out that high. And I was confident that we would retrace back into that daily open. As you can see, it tagged that daily open and almost immediately reversed. So really happy with the application of that trading strategy, and it worked out really well. Just clear this and I'll talk you through the rest of the week. So that was our Wednesday. We then took a loss here. So this for me looked pretty good. I was pretty happy with everything. On hindsight, when you look at this now, we've obviously got this big news event coming into the marketplace. We obviously have clear liquidity up here in the form of our range liquidity. So that was our medium time frame range. That was in our internal range actually. This is actually our higher time frame range. It's a 2-hour range that we're looking at. Yeah, so that was our range liquidity. You can see that news took out that range liquidity. It swept it absolutely perfectly. There we've got our daily open, which I'll just mark on for you guys here. Okay, so for me, that sell in the morning, I had a nice bit of price action pushing down. You can see there, again, tighter entry. I could have gone wide on the entry, would have still been stopped, wouldn't have made any difference. And I was then just targeting coming back to that daily open, which you can see, we got swept, and that's it. We then took out the range liquidity, immediate move down. And this was, when was this? Was this Thursday? I can't remember whether Thursday or Friday was the really confusing news. Does anyone remember? We had a really confusing news that didn't, I think it might have been this one actually. Yeah, it was this one. So I actually took this short initially. So initial push down, pull back, initial push down, and then about, yeah, so this was about our 2 p.m. So that's our half hour of our news, okay? Now, my expectation after this bearish move was that we were going to go bearish. So I took a trade like this, and I think I got stopped out. Long story short, yeah, I did. I got stopped out. We came down, and that's our daily, what did we tag? So we came down, we took out the daily low from the previous day, or we came close to it at least, and then we started reversing. Now, as soon as I started to see this bullish price action, okay, and these new highs, that for me was an indication that actually, yes, it's taken a little while to turn around, but we have our continuation. And what I was looking for is price to come in and take out the high. Now, I don't think we took it out until the next day from what I remember. Let's just have a quick look. I think it was like during the morning of the next day. I think we had this big pullback. Yeah, it was. We had a big pullback like that. That was, yeah. And then, yeah, we had another news event. So for me, this trade, it was, I took a loss initially, but then we ultimately got our profits out up about 3R. So we ended up about 2R out overall, which is, fantastic. Sometimes you have to be a little bit more on your toes like that. And again, this is where you can use those internal structures to really help you decide where you want to go. And then let's have a look at the rest of the trade. So I think Friday onwards was just a really simple trade. It's Friday afternoon. I'll be honest, I'm not a huge fan of trading Friday afternoon, but I wanted to get this trade out. We had a really clear setup. So news pushed up, it took out liquidity, internal liquidity, then big bold bearish move down, and then I just took a really simple MSU setup, which was that there. Didn't really get an ISC, not a clean one anyway. Excuse me. I suppose you can kind of class that an ISC. I mean, it's a news move at the end of the day, so the liquidity sweep is effectively the same. But then this push down, MSU setup there, engulfing. I was a little bit late on that, as you can see. Safe stop. One little tip I'd have with news as well is that when it wicks up like this, it very, very rarely comes in and takes anything in that wick. That wick is completely mitigating orders. So the safer stop I find is any structure below the wick. That I just kind of ignore. A lot of the time when you've got massive wicks like that, you can just ignore them. This one ultimately it did get swept eventually, but you can see as price well, it's a different trade ultimately because it didn't really come back up into it, but you'll find that if you're trading away from them, the structure above, so let's say you were trading away like this, if I was taking that, I would just take my stop up to there. I wouldn't really care much about that wick because the chance of it coming to fill in that wick is almost non-existent. Very, very rarely happens. And that was the week really. So, you know, it's quite simple trades, using just the liquidity sweeps that we're looking for, using the daily open to give us an idea of where, you know, the price might be headed. You know, this one here, again, filter was that our daily open was here. Okay, daily open was here. Okay, we swept that out and then we had that push down. So for me, that's a bearish structure. And, you know, when you've got structure above here, okay, that's when I'll be saying, right, take a sell to that daily open or lower, okay? When I've got structure that sweeps like that, that for me again is, well, we've mitigated that daily open now, we're pushing away from it, so the likelihood is that we're probably going to push down a little bit further before we come back in and test it again. Where we go on Sunday, kind of Monday, maybe we come back into the open here. I don't know, we'll have to see, have to wait and see. But that was kind of my trading for the week. Did we get anything earlier in the week? I think I had a couple of trades earlier in the week, but I've cleared them because I've done some analysis on them now. But yeah, that was the end of the week. All make sense? Yeah.
Does indeed.
Check. Why is your New York session a couple of hours? Like the indicator.
It's just an hour.
It's not, is it?
Yeah, so it's from 1 to 2. So I only look at the first hour really. It's all I care about. So it's 1 o'clock to 2 p.m.
Oh, so it is set like that. Sorry, it just looked so different on the other examples.
All I really care about with New York is where the trap is, where the liquidity is, and that hour is the most reactive hour. With London, it's a little bit different because with London, I'm expecting a protected area. I'm expecting a high like this. As we've discussed in the mental ship, you know, we know that, you know, the high is typically, or the low, of course, the high or the low is typically respected. Obviously, it didn't happen this time because of the news. But most of the time when you go through the charts, it's a really well respected area. So, you know, if it gets swept, that for me is a real clear indication we're probably going to go bullish. Because normally what happens is the low or the high is a respected area. And you can actually trade them like supply or demand zones. Okay, if price had come back into here, you could have bought out of there. It's not something I do. I know people that trade it like that. But you'll find that usually the high or the low of of London is respected. For me, New York is a little bit different. Okay, London's my main trading zone, so I'm looking at the entire zone. For me, New York is more about what happens within New York. So, you know, I'm looking for these traps to be created, and then, you know, expecting some sort of manipulation of the trap, whether that is that I sell from here into the trap if I want to, or that's a really good example of a trap actually on Monday last week, or we buy out of it once it's been swept. Doesn't really matter. It's just an area where I'm expecting there to be some sort of high volatility movement in price, and that's why all I really care about is the hour. I used to have it where it's set for like 3 hours. I don't know, just visually I find that it works really, really nicely. I can really quickly frame where the trap is because I'm just looking for that first imbalance to be left behind, and usually then wherever I leave the trap, I know that, you know, I've got an area which is most likely going to be swept. And as you know from your own testing, you know, it happens over and over again. Does anyone else have any questions for me? No?
No, it feels pretty straightforward when you sort of talk it through.
Yeah. and hopefully, that whilst I love you guys to have questions, but if you don't have any questions, then ultimately that's me doing my job properly. And when you guys are looking at these charts, it's all making sense. You can start implementing it. I think the one big thing I want to see from you guys this week would be great to see your daily opens on the charts. Just get used to them. Not saying trade them, not saying trade into them, not saying trade away from them. Just get used to them being on there and just watch them. That's what I've been doing for about a month or so. It's only really the last week or two I've been starting implementing them. I'm going to be completely frank with you. When you start playing around with anything new, you're going to have some messy results. You're going to have some losses because you're going to test things out, so be prepared for that. If you're pretty confident in your ability to get your accounts back up afterwards, you can welcome to do it on your live or your prop accounts. If you're nervous about that or you're not quite comfortable with your profitability, then I'd probably suggest playing around with those sort of trades on demo. And the other thing, hopefully, that you guys will start using as well is just try and avoid these risk entries. So when I look at this setup now, we didn't have any structure break. Okay, the structure low, really, if I'm completely honest, is there. That's where my structural low is. So if I want to get involved on this, I need to wait for some sort of structural low to be broken. So my first structural low in this big bullish push is that. Okay, now if it weren't for the news, it looks like that probably would have been quite a nice trade, right? Down to the Asia low or wherever it may have been. So I think structure is really, really important because, I think we're missing that off our charts quite a lot of the time. And, you'll notice it on, if any of you are on Instagram, you'll notice it on a lot of professional traders. You notice how sometimes you look at like Instagram traders and they're always in trades like that. And I always just look at it and be like, why aren't they selling from here? Well, they're not selling from here because they haven't got confirmation until that's happened. That is the first confirmation, because if you look at the structure of the marketplace, this is the structure, right? So that structure's not broken. Fuck all this kind of underlying bullshit here. That's all internal. The structure, this bullish structure, isn't broken until that happens. And that's where you can end up in losses. So I used to sell from here all the time, and I used to get myself some really nice wins. Now, I need to wait for that structure to be really clearly broken. And sometimes when I take trades that lose, I look at them and be like, why is that lost? Well, it's because I sold from here. Or maybe I sold from here, okay? Any of you in a pattern of getting consecutive losses, like you get 2 or 3 losses before the win? And is that happening to you? I found that was a real big pattern of mine before, like right before I found my profitability. I found that was a real big pattern. Do you guys feel that sometimes too? That kind of like 1 loss, 2 loss, 3 loss, and then you either miss the actual trade. Oh, that's a shame. Yeah, and then I'll finish it off for the video's purposes. Then you either miss the actual trade, or you end up taking the trade, but you're 2 losses down by that point anyway. So start implementing structural changes. Even if it means you have to wait a long time for it, you'll often be more profitable in doing so. And because the Zoom has finished, that is the end of the webinar. Cheers, guys.